from the standpoint of Hong Kong U FinTech Day, this is one of the highlights. Very pleased to have with me really four of the thought leaders and influencers in finance technology regulation all across the world. And what we're going to talk about are really the big trends, the big ideas. And, after our discussion, we'll move in and you'll have a chance to meet a couple of more Hong Kong U FinTech startups from Fundergo and Bamboo Network. And then we'll wrap up with a panel of startups talking about the ecosystem here in Hong Kong and the role in particular that universities can play in those ecosystems. If we look at the last 10 years of global finance, for me, three issues really drove global finance everywhere. It was the 2008 crisis. It was regulatory responses to that crisis, and it was development in technology. And it was really the combination of these three things that set the stage for the world of crypto, fintech, and regtech that we're talking about today. And I think if we think about 2020, of course, marks the beginning of a new decade, but also it has been strongly characterized by COVID-19. And I think if we think about COVID-19, we think about 2020, one thing that this is doing is very much driving digital and digital finance. And so what I've asked each of our guests about here today is to think forward. The next 10 years, what do you think are going to be the biggest driving issues in finance, regulation, and technology going forward? And so I'll pass the floor first to Huy for your thoughts.
Thanks a lot, Douglas. Morning, everyone. Good afternoon. So I'm calling from London, so I think Douglas said, what's the future in just a few minutes. So, which is not an easy question, and that reminds me that you talked about the HKU FinTech MOOC, and if we go back in time, we discussed about it 4 years ago, if I'm right. 2016, that's when we sat down with you and Janos, and we're talking about what will we talk about in this course. And for those who took the course, you might remember we used 5 case studies, which we found interesting. The 5 case studies were Revolut, Alibaba, Adar, Credit Karma, and Digibank from DBS. So that's where all those different case studies, which we found interesting for some different reasons. If we looked at what has happened, they all have had a big impact. I think Revolut, one of the fastest, biggest, growing challenger banks in the world, and Alibaba, of course, and I'm sure we'll be talking about it. Adar, the role in India has been just incredible. Credit Karma was acquired this year by Intuit for $7 billion, and DBS, best bank in the world last year and this year. So I think that was interesting. And at that time, for me, one of the biggest theme was unbundling and rebundling of finance, which I think, we might say, that has happened. Unbundling now has happened. Now we're really in the rebundling side of finance. So what would be my theme, I guess, for the next 10 years? It's very difficult, and that's great work, at least 4 people on this panel, because I'm sure there will be different views. My theme is platformization of financial services. I think that will be the most important theme that we'll see. So platforms, we know that platforms, in the sense of Google, etc., largest companies in the world, so already outside of finance. First, what do I mean by platforms? There are a lot of ways to define it. For me, it's really the model, the difference between a traditional model of vertically integrated organization where you do everything, and a platform, which is, let's call that a marketplace that connects producers to consumers. And I would argue that this is the biggest change that you will see and that you have seen in finance. And let me just share, a graph, and I think that's a graph, that basically summarizes, really well, what's happening on this, which is this. I think in one chart, I wanted to show in one chart, basically, what that meant. And basically, this chart shows the 10 largest financial institutions 10 years ago, and they were all banks. Today, the 10 largest financial institutions in the world, only 5 are banks and 5 are platforms: Visa, Master, and Tencent, and PayPal. So this is, I think, something that has already happened in finance, where we see not banks being the largest financial institutions, but some of them which are non-banks, which are platforms. So this is happening already. And this is really important because there will be a lot of different impacts on the financial industry. And those impacts for me are around different things. The first one is business models. How do we make money in financial services? Coming from traditional finance, I used to be at Citi before. It was very clear that making money in financial services, for a bank, 2/3 of its income is net interest income, borrowing versus lending, and then 1/3 was something else, transaction fees, etc. What we see, Visa, MasterCard, they don't make money from borrowing versus lending. Mainly they make money from transaction fees. So first, how do you make money in financial services will totally change. And for those businesses which are based on making money from lending versus borrowing, especially in a zero rate environment, that raises a lot of questions. The second impact, I think, is who are the main players in financial services? It used to be very clear, very large banks and a few things, some startups, some tech, wanting to get into finance, etc. I would have asked, I guess, anyone in a bank 10 years ago of what do you think of Visa and MasterCard? It's like, okay, that's interesting, but why are you talking about Visa and MasterCard? That's really something which is behind the scenes. So who are the main players in financial services? This platform business model really transforms that way. It's not about just creating the product, it's also interconnecting the producers to the consumers. That leads to the third part, which I think is the innovation cycle is not slowing down, it is accelerating. And here we can spend a lot of time on this, but just think of what have platforms done to the mobile industry. Think before Apple, before Android, did you have a lot of apps? Not really. The number of apps has been multiplied by tens of thousands of times. Why? Because you have platforms which on top of it, you can create things. So innovation cycles will be hugely accelerating in financial services. And at the end of the day, and especially I think within this context of the HKU FinTech Day, there's the question of what are the roles in financial services? The roles that people have in financial services that will change. Really, just think of advertising. What were your role in advertising 10 years ago, and today with Google and Facebook, really different. So in terms of the skills that you need to have in financial services, I think that will change a lot. So we're likely to see, and my view is that it's not slowing down, it will accelerate. So if we see 2030, what are the largest financial institutions? You will see a lot of new players. You will see a lot of platforms. You will see a lot of players on top of those platforms. So not just the platforms, but also on top of those platforms. And so that's definitely, I think, one of the topics for anybody in financial services to care about, because that has an impact in terms of who's doing finance, and that has an impact for you in terms of who's what are your roles in financial services. If you're interested, and as part of providing also free knowledge about it, and as part of HKU, we created a free masterclass with Stefan Müller, the former group CTO of UBS. We're both program directors of our specialization in platforms. So you can see it here. Just access it. Take that masterclass, or take any other thing. But I think be part of this world of platforms, because this is one of the fastest, or perhaps the fastest growing sector of financial services today. So that would be my trend.
Thanks for that, Huy. And I think it's a very clear one that we've seen over an extended period of time. And of course, the anti-IPO that was supposed to happen this week was going to be exactly one of those points. But I wonder, from the standpoint of this continued platformization, if we're looking at an ever smaller number of national champion dominant platforms, does that, I mean, it is, if you are thinking of tech as a network industry that has economies of scope and scale, the end result is, if winner takes all, everybody else loses. And so are we eventually heading towards a potentially very dystopian outcome?
I think at some point we might be, but I think we're very, very early in this, because here a lot of those examples on the consumer side, the reality is that finance is much, much more than consumer. It's SME, it's corporate, it's transaction banking. It's so big. So I think we're really at the early stage of this cycle. At some point, no, definitely. I think there's a winner takes all, kind of advantage. But I think we're still too early, to talk about, who's going to be those winners.
Yeah. So big trend one, platformization. Henri, over to you for your thoughts on the next decade.
Absolutely. First of all, Douglas and everybody, great to see everybody here today. Let me reorient myself with the center myself, but great to see everybody again. And it was particularly the students of the course. Really good to see you all again. And I'm by the way teaching again at HKU in 4 weeks, so I'm very excited to see many of the students either virtually or in person very, very, very shortly as well. One of the big trends that I'm watching right now, Douglas, for the next couple of months, years, and the decade to come is really what's happening. We just talk about the future of platforms, the future of finance. It's the future of money. I think all these platforms we see, the internet of value, this is becoming super exciting what we are seeing on that perspective. I think our generation, everybody was on this video, we are one of the lucky generations that will see actually the appearance of a third form of central bank money. And I'll talk about it in a second. So it's really, I think, very historical from that perspective. The things that I'm watching, let's say, in crypto, it's difficult. I cannot even know what's going to happen in 10 hours, let alone in the 10 years. But let's say the two things that I'm watching for the next 12 to 24 months. When it comes to the next 12 months, I'm really watching what I call the mainstreamization of crypto. And that happens on the retail side and on the institutional side. On the retail side, we're seeing increased month-on-month adoption of digital assets, crypto assets, Bitcoin. We saw the announcement last week of PayPal with 250 million customers who'll be able to have access to digital assets. And also then we're seeing the whole broader, kind of the adoption from corporates as well. A company like Square, who's putting $50 million Bitcoin on its treasury. So a lot of it becoming more mainstream from that perspective, but also on the institutional side. We've been talking about this for a long time. Literally the last week, again, things move very fast in crypto. JP Morgan just announced a new platform for it. It was reported in the crypto media that DBS is doing the same as well, and other banks and financial institutions as well. So really this whole movement, it's not going to stop. It's here to stay, and it's continuing from that perspective. The other thing I think is very important around this mainstreamization is actually regulatory clarity. Today, only 5% of regulators don't have somebody working on crypto. We're seeing increased tax clarity. Very important. In the US today, for example, every US tax statement, there's a question on whether you own digital assets. So all these things I think happening. Second, so that's the first big element of becoming mainstream, both retail and institutional. Second big thematic I'm watching next couple of months is really what's happening with stable coins. Again, if I send you a Bitcoin, you'll be very happy. The problem is you don't know what the value will be a month or a year from now. The beauty of actually stable coin, it's a digital asset pegged back one-to-one by fiat currency. This has many benefits. Think about cross-border payments. Today, the average fee of a cross-border payment is 7%, which frankly in 2020 is unacceptable. It is about, more than $500 billion sent, about 250 million migrants around the world. Unacceptable. So we're seeing stable coins rise. We're over $20 billion in value right now. It's grown over multiple times since the summer. So a lot of interest from that perspective. The big catalyst I'm watching there is Libra. You may hate it. You may love it. The reality is Libra completely catalyzed the space way faster than many people expected it from that perspective. So really what's going to happen from that perspective? Of course, also goes on the thematic of COVID. Again, the COVID obviously catalyzed a lot of this development. So that's really what I'm watching the next 12 to 24 months. But what's becoming more exciting, what's really the sexy stuff is what's coming 2-3 years from now. The first thing that I'm watching is central bank digital currencies. So again, Bitcoin, nobody can control it. Nobody can stop it. A central bank digital currency is a digital currency that is issued by the central bank. Again, just putting my professor out on for a second. Today, there's only two forms of central bank money. First one is good old cash that you can hold. It's a liability towards the central bank. Second is the reserve that your bank holds with the central bank. The money that you have at your lovely bank, as loved as it may be, is not central bank money. You have a counterparty risk towards that bank. And actually, our generation will probably be the first one that will see a third form of central bank money, something that's quite rare, where actually there'll be digital form of literally equivalent of banknote. And that's super exciting. Today, 80% of central banks are doing some kind of work around this topic. A lot of exciting developments going on that space as well. I mean, literally only this week, Australia announced a new project on wholesale. Hong Kong is doing one right now with Thailand, extremely advanced project. And of course, the big elephant in the room is China. China is, make no mistake, years ahead of everybody else. It is the case in B2C FinTech. When it comes to the future of money, China is absolutely, they've been on this topic since 2014. Western countries now are debating whether they should research it. China has just finished one of its phase of its pilots. They've did over 4 million transactions worth over 2 billion renminbi. That's 300 million US dollars. And you know how many use cases? Not 5 or 10, 12,000. So really the future of money, as we're seeing in front of our eyes, is right now happening in China. So very exciting development there. This is an area you need to watch. Everybody, this is going to have an impact on financial institutions. We can talk about that later because there's not much upside. It's obviously quite a bit of cost because they need to implement this, and obviously changes the way we interact with money. And the final thematic. So, I mentioned about the mainstreamization, stablecoin short term, number 3, CBDC. And the final one is really what's happening with decentralized finance, DeFi, which is a sexy term for it. It's very nascent. There's about less than $10 billion of assets in DeFi right now, very small. But from an intellectual perspective, this is what's very exciting. It's the first time Bitcoin allowed us to make peer-to-peer transfers to each other without financial institutions. DeFi allows us to literally have financial transactions, borrowing, lending, trading, insurance, robo-advisors completely in a decentralized ways using smart contracts. There's no bank in there. There's no bankers wearing ties. It's really very exciting. And the most sexy thing, the most exciting thing there is something called composability, which is a bit like financial Legos, which means you can take any application, match them together, and come up with what you want. Imagine today in the FinTech world, you could take any FinTech startup you want, put them together for free by the open source, and come up with your own startup. That is exactly what is possible today in DeFi. It's with the last couple of months proved that it works. Obviously, it's very small right now, but there's obviously a lot of work to be done. But this is an area to watch if we're going to take a long-term perspective on it. So again, what's super exciting, this is the most exciting time in the history of finance. And when it comes to the history of go to bling bling, this is the most exciting time in the history of money as well. So back to you, Douglas.
Thanks, Henry. And I think, two points out of that. The first is that if we look at technology over the past 10 years versus what we're starting to see with technology going forward, I think really the Libra announcement was really a turning point. Basically, Facebook's Libra proposal said that technology is no longer really the constraint on doing things. It's more what we want to do with that technology. And I think that's where we're really seeing some transformational moves in the blockchain and crypto space. And just to repeat something that we said last week, look out for the new course in cryptocurrencies and central bank digital currencies from HKU and edX, led by SMU from yesterday, Henri Arslanian, and myself, coming out next year. So, Julia, welcome. Good to see you, and glad you made it in. I mentioned earlier that you're a leading expert in the interaction between digital finance and sustainability, and so that probably suggests what you might pick as your big issue. But hey, you may surprise us. So what do you think for the next 10 years, big issue in digital finance and regulation?
So FinTech goes to the forest. So we have 10 years to achieve the SDGs. So the Sustainable Development Goals were signed by 173 countries to create the world we want. Now, we're 4 or 5 years in, no country's on track, and we're in the middle of a massive health crisis, which has blown us back for a long time. What we're going to be seeing is a response to that. So this year, despite COVID, we're actually seeing quite a significant response from policymakers, from regulators around the world. The EU stepped up first, but it has been incredible across Asia. Many of the countries here are starting to see it as the way out of the recovery, or way out of the crisis, and how to stimulate jobs. And so I think what we'll see more visibly next year is the race to compete. And the last couple of months was also seeing massive declarations. And so China came out at the UN General Assembly stating that they would be climate neutral by 2060. Japan followed soon after, and then Korea actually followed a couple of days after that. So expect a lot of things in that space. With that is coming a lot more focus on also biodiversity. And so it's also been viewed that this pandemic actually might just be the first of many pandemics. And so that issue on biodiversity is starting to come to the forefront. Well, what does that mean? Very, very hard to figure out how to get data for biodiversity. And so there's been a raft of initiatives being launched. There's been a task force called the Task Force of Nature-Related Financial Disclosures, which has kicked off and will officially launch next year. We've got a massive COP meeting next year, which is on biodiversity, as well as the COP26 that got kicked out to next November, a huge focus on this. And many financial centres, like London, but more, actually want to win this race. If they can set the standards first, they can get the money flowing in. Indeed, actually, some of the other nations, even around Asia, are going, actually, if we can sort of pull up our socks in this area, we can get a lot of deal flow. And there has been a lot of deal flow into ESG, into the green funds. Now, there's also going to be a move to look at the digitalization of finance to achieve the SDGs. So that's sort of building on some of the other speakers' comments, definitely with the development of crypto and blockchain, all these different things, you can actually build a lot more citizen-centric financing on top of it. We've had peer-to-peer lending and sort of crowdfunding for a while, but it's obviously moving a bit more to DeFi now, right? And that needs a bit more change and a bit more regulatory change and a bit more law change. That sort of needs to happen. And I think if you look at the SDGs against some of our laws aren't actually set up to achieve some of these objectives. And so I think we might see some of that coming in as this focus comes to the forefront. But what does that really mean? So when you're starting to look at the digitalization of finance to achieve the SDGs or something, better the world we want, let's look at Ant. I mean, Ant's sort of the green king example here. They managed to bring on 500 million people to their platform and plant over 100 million trees off the back of their app. It's incredible. Now we've had the copycats, which is great. Let's copy those type of initiatives. In 2019, we saw the Philippines copy it with Gcash in the forest. Their aim was to accumulate 365,000 in 365 days. And so there's been a whole raft of this. There's many, many examples after that. So there is an opportunity for people that are starting to look at this space. Many people think about it as a development for RegTech. And that's what I sort of spoke about on the course. And when you're looking at that, you need your digital infrastructure to be in place. And so, we are now starting to get on a pathway to be able to realize some of these things. The foundation for a number of these things is good data, good digital infrastructure, digital identity, eKYC. So RegTech over the years has been dominated by sort of AML, KYC, discussion and, anti-money laundering, blah, blah, blah. It's time to move on. Like those things actually should have been solved. We have been talking to them for a while. More banks are getting fined. There's more directives coming in, a lot more happening in that space. There's actually more of a realization now of how much environmental crime is happening. So just species destruction, particularly in the Amazon, but obviously hugely around Asia. And so how can you sort of get these digital base layers in place to go up the curve? So the digitalization of finance for citizen-centric financing is going to be key. Then you've got the governance of infrastructure. So with the development of the discussions around Libra and crypto, you're going to have new digital governance ecosystems emerging. And that was discussed a lot by the UN last year, and it's actually been put forward as a key recommendation. So do any of the processes that we have today really enable us to govern digitally? Do we need digital Bretton Woods? So there's a lot of discussions around that at the moment. And, Henry gave a great update what's happening in that sector. Huge amount of different regulatory oversight for that, coming through. And, we just mentioned Ant before, Ant, what's that? It's been stopped because of FinTech supervisory changes, are sort of on the horizon. So an interesting point there, I thought. My third point would be increased connectedness, decreasing privacy. and the balance between that. So for any solution also for sustainability, you will need more transparency. You need transparency in supply chains, which we're going to need after COVID anyway, but we really sort of need to understand scope 3 emissions of supply chain. So what is the carbon impact? And there's actually carbon taxes being discussed in Europe. And so that's going to be really interesting from a trade point of view. But what does that mean, in terms of increased transparency? Well, we're moving forward on blockchain. So years ago, there was a lot of discussion on opportunities in blockchain for more transparency. We're starting to see that actually sort of come a lot more to fruition, which I think is really promising. The other aspect is open banking, which is moving to open finance. There's a group that I work with a bit called Icebreaker One that actually pioneered a lot of the open banking standards. And they're going into open finance. And we're actually starting to look at the structural changes of data to be able to integrate, to be able to actually transfer more information from different, say, energy groups or sectors, or just linking different data sets, more with the idea of going, well, how do we look at digital sort of environmental ecosystems? The UN Environment Programme has also been able to, they've passed a resolution this year to actually build like a digital earth. So there's some really, really, really cool stuff happening there. So, I think watch that space. So in terms of new names, definitely SDG tech, definitely, clean tech. I wouldn't say green tech, because green tech's a bit more renewables, and we've sort of been there, done that. But a lot happening, I think, in the sustainable finance space. Also from a bigger picture point of view, a huge amount of industry consolidation. There've been a lot of mergers, a lot of buying sprees in that space. Anyone that builds anything there, should be able to make a good dollar. And of course, EdTech. As a mum, I want EdTech to go, really well. So, there's been a hard time the last sort of 6 months. It's obviously ripe for innovation, a huge amount of change in there. A lot of great companies coming to the forefront, and you need more and better content curation. So I think that's going to be a massive trend of the future. I'll stop there, though.
Yeah, no, that's great. And I think, the EdTech point is one that's gotten very familiar, particularly in the university context. But the other thing I was going to say is that one aspect of COVID-19 that we're seeing is an increasing effort of governments to think through how can they direct some of the fiscal resources that they're deploying in dealing with COVID from the standpoint of building better systems, building better frameworks going forward. And this is something, there's a lot of discussions about Green New Deals, these sorts of things, but it's something that the IMF in particular has highlighted a lot. Very good piece from Martin Wolf in today's FT looking at some of related issues. Big strategy from the EU combining digital sustainability, same from the standpoint of China. And so, yeah, I think this is one of those issues that one is moving from just a sort of social issue to one that is really about the core way that we structure our economies and our financial systems, as well as a business issue. So great stuff. Brian, over to you. What are you thinking from the standpoint of big issues over the next 10 years?
I was initially worried about going after Henri. Now I'm more worried about going after Julia, because she's covered a whole bunch of stuff there. But in some ways, these are wonderful themes to set it up. And so I thought for this, for the area that I would focus on actually leads in well after Julia, because Julia talked a lot about data. And so what are we doing with data? We're processing it through these, these advanced analytics called AI broadly. And what does that mean for us in the next short term, medium term, long term? So maybe to play on the theme, since the theme today is about, finding intersection of finance, tech, and law. There's the adage about, I think was it Gates that said, we don't need banks, we need, banking services. So do we need bankers? Right? And what does that mean, especially for this audience? So given my relatively new role at the university, I've learned that people like charts, so screens, something on screen. So maybe I created something brief for the presentation, and so I thought today we'll talk about AI and governance in finance and beyond. So in some ways it hatches on about some of the aspects that Julia had talked about. So increasingly within banking, and not just within banking, across a lot of what we're doing, there's, the ABCD, AI, blockchain, cloud, and data, right? And so there are lots of use cases across as we know it now, but also specifically within banking, whether it's in lending, whether it's in the area of asset management and securities. As we know, we're introducing these advanced analytics in so many different ways. And so IOSCO recently just had a consultation in relation to AI and machine learning, which we submitted together with the LITE Lab, did something with the FinTech Association to submit there. And in some ways, part of our submission was around, I think, what you were talking about earlier on about Huy, about winner takes all, right? So some of it is the unintended consequences as you have higher levels, such that only the big tech will be able to fulfill that, right? And only the big banks. So anecdotally, what people talk about in terms of the concerns for AI is, and a very unfortunate acronym, FAT, right? Fairness, accountability, and transparency. So fairness relates to the issue of unconscious bias, right? That could happen depending on what kind of data, right? So of course, Julia will feed in good data, right? But who knows what other data goes into these algorithms, right? So, and do they come up, what do they spit out? So famously, Amazon's recognition. So Amazon is one of the big companies around the world, and their AI, identified 28, of the U.S. congressmen as criminals. Now you can laugh about that one, but that's how the AI was structured based on the data that went into that. Linked to that, you've got new and advanced technology. So when I gave this talk 6 months ago, it was GPT-2. Now we've got GPT-3, and it's pretty darn good, right? So the photos down at the bottom, the 8 photos there, none of them are real, all generated by computer. So how does that deal with the identity issue, right? If we're going to go more online identity, how are we being able to trust that? And again, linked to some of the issues that Juliet mentioned about surveillance, right? We're going to have more watching us, not just all around the town, but also in terms of the devices that we're carrying with us all the time. So I talked about some of this in the context of COVID, right? And I'll come back to that a little bit, where COVID has forced us to think about these. If you look at the contact tracing and the types of the way that people are thinking and interacting, the scientists tell us, that we need at least 40% of the population to adopt it. We couldn't get there. Singapore couldn't do it. Australia couldn't do it. There's so many other countries that try to introduce it. Humans are just not willing to trust it as yet, right? And the systems and what's in place. Accountability, who actually will be liable for these things? So for lay people, best way to understand it is autonomous driving, right? So the car hits somebody, who's at fault? Driver, manufacturer, sensor developer, algorithm developer, right? How do we think about that? Transparency, are they black boxes? Do we understand how it actually works? And the scary stories about how whether Google engineers and Facebook engineers don't actually understand how their algorithms work. So especially when they introduce it into important things like dealing with civil liberties, but also with dealing with access to justice, but also finance. How much should a consumer, a regulator, and an investor understand about these systems that are going through? So I wanted to touch upon a few things. So in terms of a way forward, some of the things that we've been doing is for those that have followed AI, one of the well-known moments was not the Go game, but the chess game, right? So when Kasparov lost to Big Blue in IBM, that was the first of the human versus machine moments. And subsequent to that, Kasparov actually then coined the term centaur. So then he created systems whereby humans and machine work together, and actually that worked better. So that's why some people like the phrase augmented reality, as opposed to augmented intelligence, rather artificial intelligence, where humans and machine works together. So the initiative that we have, I call the Chiron imperative. So Chiron, for the classicists around you will know, was who Homer called the wisest and justest of all centaurs, right? So if we have a human in the loop approach, Hopefully this can help regulators and policymakers think about this. And again, for people, for lay people, one way to think about it is as follows. So as we go about our daily lives, we actually interact with AI and ML in lots of different ways. So what role are we actually having in this? Are we an AI trainer, right? Conscious, and as we develop the algorithms and models, are we an AI user, right? Again, whenever we use Netflix or Google, we actually, we're training it, right? Knowingly or otherwise. Do we have a role in quality control or governance, right? And that's where within large companies, increasingly you see external AI ethics committees or governance committees that are overlooking these before the products come out. And regulators in finance are looking towards senior manager regimes to actually get individuals, humans, accountable based on their roles. Are you an explainer or interpreter? And that's important with the black box aspect. So are you trying to explain it to a consumer, kind of like GDPR ostensibly has a right to explanation? Are you trying to interpret it to a fellow statistician and computer modeler, right? And again, it's a different nomenclature there. Are you a creator? So this goes towards some of the initiatives like IEEE talking about ethics. So are we going to professionalize computer programmers when ultimately a lot of them, the best ones, didn't even finish university, right? So how are we going to do that the same way that in finance we try to professionalize it with different initiatives after the global financial crisis? And last but not least, it's human as user, consumer, and customer. So as we use it, what will we accept? What won't we accept? Unfortunately, as Julia mentioned regarding privacy, we accept all the terms and conditions, right, before reading them. So how is there better education around that? Maybe I wanted to end with a couple of last thoughts on, firstly, on the role of the human. So as we think about the role of finance, what aspects will we be doing, and what will the future financial institution, fintech, whatever we're going to call it, right, have? Famously, a lot of the big banks now call themselves tech companies, right? So they're going to have more tech people than traditional bankers. So what will your role be out there attending this in terms of that? And then secondly, provocatively, one of the issues that arose when discussing AI was in relation to UBI, right? Universal Basic Income. So people were saying, and one of the former presidential nominees was putting that forward. If there's going to be more AI, there are going to be less jobs. So how are we going to, ensure a basic level of living? This issue is re-arising with COVID, right? Now with the monetary stimulus going in, where a lot of people who, we are lucky, a lot of us, we are white collar, we can continue working online, but a lot of people cannot. So therefore there's money pumping in to allow them to survive. Now going forward, I think the UBI concept is now being seriously considered in various jurisdictions around the world, but how are we going to fund it, right? And how will that affect the fabric of society? So how's that for a couple of big issues for consideration? Thanks.
Excellent. Thanks, Brian. And I think, we've used up all of our time, and we could have continued, I think, this conversation a lot longer. But if I sort of put it all together, I think we can say big issues of technology. And when we're talking about technology, platforms, data, about autonomous systems and the relationships between humans, data, and systems. And I think these are going to be some of our biggest issues from the standpoint of sustainability. And I think that Julia has hit this exactly right, that COVID-19 is the first of a series of existential sustainability crises. And in many ways, we have to use this one to get ready for the next one, whatever it may be. And they're unlikely to get easier or less existentially challenging going forward. The third, and one that we haven't gotten to today, unfortunately, I think is one that I would summarize as a sort of tension between globalization and fragmentation, taking us back to some of those issues that we began the day with. So, unfortunately, I can't keep this group here all day, but feel free to send through some questions through the Q&A or the chat box, and we'll stick around for a little while to answer those. And so maybe just join me in thanking Henri, Huy, Julia, and Brian for joining us today and for a really great discussion.